Hey guys, Mubarak here of InPennyStock. Hope you're doing well. Trying out this new thing this week to see how it pilots, but wanted to see what it would be like if we went live every day this week. So we're going to be trying that out this week, same time every day. It's going to be 8 p.m. Pacific. That's 11 p.m. EST. I know it's a little bit later than I think we'd be comfortable with, but I know that's the prime time that people can really get into their research, prepare for the next day. And so we're going to be continuing this for the whole week. So hope you guys enjoyed this. Again, this is only going to be for our VIP members in the Facebook group. So again, you have to make sure that you're signed up for InPennyStock.com. Now, behind me, what I'm going to be talking about today in this lesson is essentially the Dow Jones, okay, or the Dow 30. And want to really talk about what they are, what makes them up, and more specifically, how you should utilize them in your portfolio, okay? Because a lot of people want to get involved with dividend stocks. They want that passive income that stocks can provide. And this investing in these is probably the safest and most reliable tactic in order for you to get started trading. All right, so first of all, you probably recognize most of the names on this board, and that's because these are the companies in the Dow Jones. There are 30 companies, and Dow is actually one of them. It's not what Dow Jones stands for. It's actually a chemical company that merged with DuPont a few years ago. Big chemical pharmaceutical type company. So these 30 companies are the largest public companies in the United States. All right, and this gets adjusted. This is the most recent one in 2020. I think the most recent change off of this list was GE was dropped for, I think, either Apple or Nike. But generally speaking, these are the 30 largest blue chip stocks in the world, in the United States. And so what I'm going to be covering is what you should do with these stocks. And these stocks don't necessarily trade like penny stocks do. There's an insane amount of coverage on these stocks. These are the 30 primary stocks that most hedge funds on Wall Street trade. So you're competing against them. But in general, these trades and these companies have millions and millions of dollars of shares traded on a daily basis between all of them. But the things we can take from this as an average retail investor, you and I, is we basically found the most reliable companies in America. And fortunately, a couple of them are actually great dividend stocks for 2020, right? So if you're looking at the best blue chip stocks to invest in 2020 for dividends, this is a list for you. And actually, this is sorted in an interesting fashion. I sorted all of these by dividend yield percentage rates. So Dow being the highest yield provider at around 5.5%, which is pretty incredible. Holding a blue chip stock at a 5.5% dividend yield, that's one of the safest investments that you could do. And then going here to the bottom at Visa, this only has, I believe, a 0.5% dividend yield. Okay, so again, not the best, but these are all very high growth. I mean, not insanely growth because they're so mature businesses, but you know, Apple's been going up 50% year over year. Microsoft, IBM and Intel have been doing very well. IBM also has a very large and useful dividend yield. I believe it's around the 4%. Same thing with Verizon. Verizon actually makes up about 20% of my own personal portfolio. But again, this is just purely educational, as I always say, just a disclaimer, not investment advice. And so just keep that in mind. Now, looking at these stocks, right, if you invest in anything almost in this column here, I would say, you can get a pretty strong dividend yield and stay in a good passive income methodology, because 5% dividends is much better than your money just sitting in the bank doing nothing. And these stocks are pretty reliable. You know, the only one that I probably wouldn't hold long-term maybe is like ExxonMobil. And that's just because it's an oil and gas play. So I'm sure you guys know the gas company. And personally, I just feel that with the IPO of Aramco around the corner and alternative energy and renewable sources coming about, I just don't know if this is something that I'm going to want to be holding in 10, 20 years from now, right? So this is looking at the stock market from a long-term view, almost a Warren Buffett style of trading, but it's very useful for those who want to get involved with dividend stock trading. All right, these are probably the best blue chip stocks currently out there because they make up the Dow Jones, right? So anytime you hear that now on CNBC or the news, you'll understand that these are the companies they're referring to. So the U.S. stock market is actually tracked by a few indicators, but one of the main ones is the Dow Jones, and that's an index that is accumulated of all of these stocks together. And so they're aggregated and averaged out. And as that number increases, that means all of these are collectively doing better. And that's pretty much what people mean when they talk about, oh, the market is up or the market is down. They're actually just referring to these 30 companies. These 30 companies are dictating how people treat the US economy. And so, again, that's another reason why penny stocks are very, very interesting niche, because they don't tend to follow the market, right? No penny stock cares. I mean, Boeing, that's a specific example. So there might be smaller penny stocks that are influenced it when they do partnerships with these types of companies. But other than that, they really don't have any involvement in them. And so the day-to-day action, no one really cares about the market if you're a penny stock trader, because those stocks that you're using are kind of out of the sphere here. All right, so that's what I wanted to cover on the dividend stock realm. Now, this is a live chat going on, and I want this to be an open Q&A. So if you guys have any questions, my team will let me know. You can just type up in the chat, and I'll be able to address it at the end. But as I mentioned before, we're going to try to make this a daily habit, 8 p.m. Pacific, 11 p.m. Eastern, so that way you guys can come here with your notes, with questions, and I can help you guys get through that, as well as kind of introducing my watch list, which I'm going to start doing tomorrow. I'm going to compile about 5 to 6 stocks utilizing the InPennyStock screening criteria and make that available for you guys. And then we can kind of discuss it, talk about how I located them on the watch list, as well as what that means, right? For a stock to be on your watch list, what are the significant factors that you should keep track of for those stocks on your watch list to know when they're about to shoot up and when they're about to be a nice active stock trade for you that day. So this is it on the dividend side. I'm going to keep up the left-hand side while we go into the next part, just so that you guys have access to these stocks. Because I would definitely write them down. There was a time when I memorized all 30 of them because it's pretty easy. These are the biggest companies in America. So this is what they're referred to when they're talking about the markets. Okay? So for the second part of the live, before we go into the Q&A, I want to go over catalysts. All right? It's a very important term. I utilize it a lot throughout the InPennyStock course, whether you're looking at the free videos on the site, whether you're getting into our back-end VIP university program. And so catalysts are also used all the time on Bloomberg, CNBC, and you should be aware what to look out for as well as what they even are. Okay, so I categorize catalysts in, I would say, 4 different buckets, okay, because these are the 4 key metrics that will come into play when you're looking whether you want to buy or sell a stock. All right, so the first one is technical. Okay, I always bring this up first because technical analysis, there's day traders that use only technical analysis and only rely solely on this to do their trades. And so it's an important concept to grasp and utilize. So technical analysis is anything related to the visuals of the stock. And that, in this case, means the stock price charts. Okay, so just by looking at a stock, you can tell where it's going to trade, in what direction it's going to move, how to categorize it. And we teach more of that at InPennyStock.com. But the technical portion of a stock is everything. Within 30 seconds of looking at the stock price charts and navigating some of the different time frames, I'm able to tell whether or not this stock is an actual player and something that should be utilized and maybe put into our watch list, or if it's just too unreliable of a stock, I trash it and I move on. And even those scenarios, I want to just give a little tip for those people who are getting into trading. Even stocks that you research that you don't feel like have a reliable stock pattern, they don't fit into the normal molds, maybe you can't identify a line of support or resistance for those specific stocks, I would still recommend always setting an alert for a 52-week high. Okay, so that is my indicator, because what that means is that maybe at the time that you were examining the stock, it wasn't interesting and it didn't have any type of pattern that you could rely on, that you could utilize in your benefit. But after, if you were to put it an alert on your brokerage platform, on your stock screening software, whatever you tend to use, if you were to put an alert for yourself to be notified when that stock breaks its 52-week high, that's still probably move on your part, because at that point something happened, some type of catalyst occurred that caused it to break its previous record high, and that's something that you want to keep track of, because that could be your next great play. So going on with the discussions of catalyst, the second catalyst, okay, and this means specifically in regards to the management team of the company, right? So sometimes, say a CEO just resigned or a new CEO came on board, right? Those are specific examples of a fundamental catalyst that would affect the price of the stock. All right, layoffs, expanding the stores of a company like a retailer. All of these are fundamental analysis, which means it has to do with the company itself, okay? And this is something that people will want to spend time on for more long-term holds, right? So if you're doing a strict day trade, usually the fundamentals don't help you too much, unless you're doing what I refer to as a separate category, even though some people pair it into fundamentals. So this is like either 2B or 3, right? What I would say this is the actual industry or the market segmentation, right? So the reason that's important is because based on how a market is doing at a certain time, there's a whole nother separate level of hype and kind of manipulation factored in. So what I mean by that is, if you look at, right now we're in 2020, February, there was a massive action with Tesla that happened in the last few weeks. And because of that move in the market for Tesla, the whole electric battery, electric car industry was affected, right? And so those stocks are just doing great. Like if you look last Friday, there was an amazing play, BLNK, that just announced a partnership with Tesla, that they were going to be working with Tesla. And this price went up almost 100-something% in a single day. And there were students that were able to catch that by understanding the relationship between catalysts, a fundamental and industry catalysts, because that strongly will move the price of a stock. All right, so that is essentially what I wanted to cover with catalysts. It's just a very brief overview. Now I just want to check in to see if you guys have any specific questions related to stock trading, whether it's a specific stock, whether it's a certain investment you want to look into, or if you have even a personal life trading situation that you want to share or ask about. That's what these lives are going to be about. All right, so give me 1 second here. Let me take a look. Let's see. Okay. All right. Well, one very popular question that I think I have made a video for earlier this week, but I'll address it again, is how much money do you need in order to get started trading? Okay. This is a very specific question that I recommend traders think about before they just dive in, right? Because we get messages all the time at InPennyStock on our live chat about people wanting to trade for free, or people wanting to, just start trading because they understand that it's the right thing for them to do, but they just don't know how to go about it. So what we recommend, or what I've been recommending to students here at InPennyStock, is while you're saving up your nest egg of capital that you want to invest, right? And that should be at least $1,000 or $2,000, okay? Now, nowadays, you're in even a better position than before, because before, I would recommend students have at least $2,000, because then they wouldn't have to worry about trading commission fees subtracted from their account, okay? Now what happened recently in 2020 is that all of the brokerages, right, the companies that provide you with an investment account for you to buy and sell stocks from, they've pretty much all gone a race to the bottom, which is great for us traders, because Robinhood came out a few years ago and introduced a revolutionary, zero commission trading, and they kind of became a $1 billion company off of that. And I guess they were pulling a lot of users and a lot of new traders from different platforms because of their ease of use and their free trading commissions. So all the other companies joined along, and Charles Schwab, TD Ameritrade, Fidelity, E-Trade, all of them made their commissions free. So now you're in a better position. But the cool thing is that you can sign up for a free trading platform like on eTrade.com. If you set up an account with them, they have a paper trading module built in to their back end. TD Ameritrade has the same thing. They merged with this company called Thinkorswim, and they have a free trading platform for demo accounts, right? So the great thing about that is that you can test your hypotheses of wanting to buy and sell stocks and not put any of your own real money at risk. So what we generally recommend here at InPennyStock is that while you're trading and while you're not trading, but while you're learning, while you're going through the courses, learning the concepts, understanding, watching the videos, going through the resources, developing your watch list, while that's all happening, you're able to, first of all, save up on the side and get your nest egg or investment account up to $1,000, $2,000. And on the other side, you're able to start paper trading with even things like Investopedia. They have a free stock simulator. You can just Google it and sign up and at least get exposed to how it would be if you were doing day trading.
We got a question?
Okay, nice. That's it.
And just be sure to reiterate it.
Okay.
Is there a platform that is known for faster sells or or faster closes on stocks?
Okay, so the question is there a platform that's used for additional faster closes on stocks
compared to Robinhood? The person uses Robinhood, they want to know if that affects
how
fast the trade goes through versus
correct. Yes. Exchange. So that's a really good point. So what the person is asking about is execution speed, right? So going back to placing orders on stocks, right? As for those of you guys who have traded, you understand that when you put in an order to buy or sell a stock, you don't necessarily get it fulfilled right away. You put it into a queue, and it's basically a whole line of people that are wanting to buy or sell the stock at maybe the same share, right? So you might put in an order to sell 500 shares at $3, right? But there might be 7 other people that also put in different share orders for the same amount. Maybe they also want to sell for $3, and they put in total different amounts of shares for, right? So there's an electronic algorithm that occurs to determine whether or not your order gets fulfilled. But actually, this person is actually right that Robinhood, because of the fact that they're not really investing heavily into their internal systems, and it's pretty crazy. There's actually a great movie on this called The Hummingbird Project. And essentially what it's about is Wall Street has spent billions of dollars on simply getting a direct connection, like literally electronic. I'm talking about like a wire and a plug, literally getting a direct connection into the electronic outlets and the Wi-Fi network of the stock exchange in different places, right? It happened in Chicago with the Mercantile Exchange, happened with New York Stock Exchange. So wherever the exchange is, because they get the data and the stock price changes milliseconds ahead of other people, so that way they can execute their trades faster. So Robinhood is actually one of the slowest, and that's one of the reasons why day traders, we usually recommend for them to use a platform like E-Trade or TD Ameritrade. Those have been a bit more on the faster side. Same thing with Charles Schwab and Fidelity. Again, this is just personal testimonials and use cases that I've heard over the years. It's a possibility that they've changed since then. But generally speaking, those have also been known to do slower fulfillment unless you're one of their private banking clients, which usually requires you to have a net worth of $1 million or something like that. So for us average traders, so far what we found to be the best is TD Ameritrade and eTrade.com. Couple other ones I think have been kind of fighting up in there is Speed Trader and Ally Invest. I think those, I'm not sure if it's Ally Invest, but there's another softwares that are upcoming. But yes, you are 100% right that depending on the market maker and the software you're using, that'll dictate how fast your order gets filled. Okay, so again, what we're going to be doing is we're going to be having this type of live Q&A daily, 8 p.m. PST, 11 p.m. Eastern, and everything in between. But come here ready with your questions. We're going to try to keep this consistent. I'm going to come in with 1 or 2 daily lessons, maybe talk about stuff on the markets. Tomorrow, I'll be introducing our weekly watch list, stocks to keep track of. It's a new concept, not super excited about just trying to give out not give out stocks, but put it as a list for you, because I think there's a lot more value if you're able to create your own watch list. But in general, I'm going to introduce the stocks on the watch list, or my personal one, and discuss how I found them, the research process, how you should log them. So stay tuned for that tomorrow. And we're actually having a sale going on right now at InPennyStock.com on the VIP sections. You can actually, if you type in the code NEWMEMBER50, you'll be able to get 50% off right now. So in 2020, if you're looking to do stock trading, if you're looking to properly utilize your extra capital, make those smart investments that you know are going to pay off in the future, InPennyStock is the program for you. So hope you guys enjoyed, and I'll see you guys next time. Take care.